2024 is ending on some big news. Today, December 18th, 2024, the Federal Reserve reduced the federal funds rate by 0.25 percentage points, bringing it down to its target range of 4.25 to 4.5. This marks the third consecutive rate cut since September, aimed at addressing economic conditions and inflation concerns. But what exactly does this mean for you? The Federal Reserve, often referred to as the Fed, is the central bank of the United States. Its primary goals are to promote maximum employment, ensure stable prices, and moderate long-term interest rates by adjusting the federal fund rates, the interest rate at which banks lend to each other overnight. The Fed influences overall economic activity, and in this instant, the rate cut is a response to both persistent inflation. Consumer prices have risen by 2.7% over the last 12 months, leading up to November, slightly above the Fed's 2% target rate. We also have cooling labor markets. Unemployment rates have risen slightly, but remain low, indicating a cooler labor market. And we also have economic growth concerns. We need to balance both economic growth without targeting a recession. So how does this impact you as a potential home buyer, particularly within the veteran community? So lowering the federal fund rates can lead to a couple of things. One, it can reduced borrowing costs, which overall lower interest rates can reduce borrowing costs for consumer and businesses, potentially leading to increased spending and investment. We also have decreased saving rates. So interest rates on savings accounts may decrease, affecting savers' returns. And this is where, you have to look at different options that you have and maybe invest or not. I am not a financial advisor. That is my disclaimer. There's definitely options that are out there for everyone. There's also the potential of more affordable mortgages. Now, mortgage rates may decline, making homeownership more affordable, which can benefit potential home buyers, including veterans and military families. Now, however, which is the big asterisk here, it's important to know that mortgage rates are influenced by various factors, including economic conditions and lender policies. While the Fed fund cut can lead to lower rates, there's also other elements like inflation expectations and market demand also play significant roles. So let's take a look at the 10-year Treasury, which is a good indicator of where the 30-year mortgage is going, but it's not the catch-all. So let me share my screen with you guys so you guys could take a look at that. So I'm going to refresh my screen. So this is a 10-year. This is happening in real time. And I'm going to look at today and kind of show you guys what's been happening. So you guys are fully tracking. So as of this time right now, so almost 3 p.m. Eastern time, this is just for the day. The interest rates have gone up significantly. And this is something we've talked about, because when people are expecting back in September rates to drop from the Fed fund, they anticipated that interest rates like mortgage rates would fall. And they didn't. They actually skyrocketed. So this is the same thing has happened today. And this is something we've been talking about and letting people know for the last 30 days. That opportunity to buy lock-in rates was now leading up to this. Now, if you didn't lock your interest rates, now you're going to see that you're going to be paying a higher rate. So if you're in the middle of buying a home, make sure that you guys are taking some time, calling your lender so they can let you know what the current rate is. Should you be locking? Should you not? Normally what we see, and it's very cyclical and definitely more like a roller coaster ride over the last year. But what you go, and it looks like it continues to creep back up, like as we're doing this live. Again, these are all factors that are going to be playing it, and continue checking it because it is a good way to indicate where that where that mortgage is. All right, so let's kind of go back to what we back to what we're talking about as well. Now, Now, looking ahead, the Federal Reserve has signaled a slower pace of rate cuts in 2025, projecting only 2 additional quarter percentage point reductions by the end of the year, unless there's something unexpected happens. Now, as a veteran or military family considering homeownership, it's critical to stay informed and be prepared to act when the time is right. Here are some steps to take advantage and take note on. So one, monitor mortgage rates. Keep an eye on current mortgage rates to identify favorable opportunities. You guys can check out like Mortgage News Daily and kind of see what the average rate is out there. You should also be assessing your financial readiness, ensure your credit score, savings, and overall financial health are in good shape to qualify for the best programs and best rates. Also, utilizing your VA home loan benefit, and that's something that we do on the channel all the time because we want to be able to educate you guys on all the different aspects and benefits of your VA home loan, like no money down, competitive interest rates, but working with the right people can seem daunting, but this is why you guys need to focus in and educate yourself on here, because we're dedicated to providing you with the knowledge and resources to navigate these financial decisions confidently. Join us on upcoming live events. I know we have one coming up tonight, and we do them every month, and we also show videos every month around trending topics around real estate. So make sure you guys hit the like and subscribe button to stay informed, and I'll catch you guys soon.